And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. We are going to get some sunshine today. I'm excited about it. And what do we got going on here? Look at this. The next bank to fail, First Republic Bank, down 32%. Trailing behind them is Western Alliance Bank Corporation. And look, we got the CPI report 2 days ago. We got PPI yesterday. And today's jobless claims coming out a little more honest than expected. And here's what I mean by honest. Jobless claims actually went down. So people still got their jobs. That's bullish for the dollar. Additionally, you've got housing starts, which are up, and building permits, which are up. I wonder if inflation is under control, pal. And look, now what are we talking about? The cracks are coming in. Credit Suisse Bank down. JP Morgan about to get hosed. Bank of America about to get hosed or already getting hosed. Wells Fargo breaking this to the downside. Looks like they're going to get hosed. So what do I want to bring us to is a tweet that I just twittered. I'm not much of a tweeter, but here you go. And I hate to even show this. The New York Times posted this 5 days ago. It's a comparison of the 2008 banks that got wiped out, resulting in $307 billion in failure. Compared to Silicon Valley Bank, which was $209 billion, which is just a lie. It's a straight up lie because we know that SVB Bank is now the second largest bank failure in history. They had $320 billion. They went bankrupt in 1 day. So again, my baseline prediction has been a financial crisis this year and a failure in the bond market, which I believe we're just beginning to see the cracks. And just wait, if Powell goes ahead and raises rates 25 basis points on the 21st, it's not going to be good. And Silvergate Bank. So here's the bank failures so far. We had Silvergate Bank fail. SBV went under. Signature Bank just went under. And they keep halting the trading. It's market manipulation. Charles Schwab, they even were halted the other day. And now it's First National Bank. They are halted. So Biden says, don't worry. Everything's under control. Don't worry. Everybody's secure. And we're going to backstop everybody's deposits. So essentially what the federal government is doing is they're taking over the banking system. They prevented a bank run, in a sense. That's what they did. And of course, don't worry, Biden says. Taxpayers are going to pay nothing. And look, this is not a black swan event. It's been predicted by Ray Dalio. It's been predicted by Jim Rickards. It's been predicted by Jeremy Grantham. And I even did a little prediction way back when in June this year, and I called it out on the 6-month time frame. We had this bearish engulfing candle that came in right here, and I said, look, this has only happened 2 other times in history. Once was 1973, ahead of a 10-year bear market. Once was 1929, ahead of a 10-year bear market. Now, we're getting a lot of new subscribers. Thank you guys so much for subscribing to the channel. Don't forget to like and post it in the like. But the most important thing you can do if you want to learn how to trade and follow these markets is go to our resource center at bitcoinadvisors.com. Learn how to set up TradingView and follow along, guys. It takes 15 minutes. You'll be able to track all these assets, gold, silver, bank stocks. You can even join the Discord, which we're getting a lot of new members, and join a tight-knit community of traders where you get free trade setups and really kind of get some understanding of the market so you have an investment strategy, a plan to go forward in these markets, because I've been saying it since the beginning of the year. This is the year of risk management, which if you don't have that, you are going to get hurt. very, very likely. And look at Bitcoin putting in a little rally here on the hourly time frame. But is it enough? Is it enough to really get the party going? I mean, look, I'm going to stick with my thesis here, and here's what it is when you got the biggest banks in the world doing, crashing, alongside the biggest stocks in the world crashing, unless we have a decoupling event, in which, all of a sudden stocks go down. Look at Tesla. Tesla from the all-time high, huge down, probably going to get sold off this green 55. You got a death cross on the hourly time frame, on the daily. I mean, it's looking droopy. Roku down 60%, Uber down massive this year, Verizon down. I mean, the biggest companies in the world getting hit. And what I'm talking about here is not only the NASDAQ, which is, to be fair, we had a target on the NASDAQ popping up here at 1260, a little double bottom action here. But as Christine Lagarde just raised the market, the basis points, the interest rate in the Eurozone, 50 basis points. I thought she was going to maybe save the day and say, hey, we're bailing out Credit Suisse. We're not going to raise rates. And apparently that inflation thing is a big concern still in Europe. So at the end of the video today, I'm going to go over my favorite trade setups on CFX, VRA, and what's the other one? Stacks. I got to bring that one to the top of my list. There's another one on SVB. Sorry, it's the Binance coin, one of the Binance coins, which, let's see, where are my stacks? I guess I gotta put it back. Oh, there it is. So I'm gonna bring this to the top of my list here. We'll go over this at the end of the session here, and make sure you do, like and subscribe if you enjoy some of the content. I'd appreciate it. Other than that, Resource Center, set up TradingView, join the Discord, and all right, let's get into Bitcoin price action. I'm going to make it short and sweet today, guys. And look, we did say, hey, any kind of a tick above yesterday's high, very likely going to come up really to the pivot on the day, and that is the line in the sand for me, 25,780. If we can get a daily closure above there and hold above there, that's going to look good for some continuation. Right now, currently posting a higher high and potentially a higher low on the hourly time frame. Really, this is the one that I want to see, and it's all but done here in the next hour and 13 minutes. If we can close a 4-hour closure back above 25,248, that will call it 25,363, which is probably going to be that pivot right there. But apparently people are going, wow, I need to get out of my banks. I don't trust the bank anymore. I'd rather trust Bitcoin. Bitcoin is a free way to store your money. You no longer have to leave your money at the bank, the biggest Ponzi scheme in the world. So any kind of a 4-hour closure back above 25.34, I do believe we'll visit the top side of the range. But the most important thing is we got to close the day above there. Additionally, the 5-day time frame is going to close today, and this is an important one. Bullish engulfing candle. I mean, this would imply continuation on the next closure. However, if the dollar starts to rip to the upside, again, we have a key level on the dollar, which the daily time frame did break above it. We are testing this trend line. Today is Thursday and is known for being a down day for Bitcoin. So currently up 2.6%. I guess that theory is not going to hold for today. But importantly, on the dollar index, we're getting some volatility here. We had a big move up, and I'm not getting much from this hourly time frame. Momentum remains to the upside as long as we're above 104.37. Volatility is low, and to me, this looks like a bit of a buy if you were going to long the dollar. Why would the dollar go down when the rest of the world, well, maybe the euro is going up? Maybe the yen is going up. Interest rate hikes coming. So March 21st. So again, the economic data came out bullish for the dollar today. It's just the beginning of the day. People are just waking up. It's 7:48 a.m. Pacific time. Things are well away on the East Coast. And so back on a Bitcoin base case scenario, we're coming into that major trend line on at 25,000. And again, the momentum is crossed down. Will cross. It will cross back up above 24,992. Kind of uncrossing itself there. And then I'm going to have to check in on some of my other coins here in a minute, as those trade setups might not work out. If Bitcoin puts in a rally, it could get invalidated. So I'm going to jump into, again, why. Let's look at the bullish case for Bitcoin. Let's look at the bearish case. So, again, just a tick above yesterday's high. I do believe we get a free ride up to 25,000, maybe even 26. The shorts, I really just don't see how people aren't going to short the bejesus out of this thing with all the financial contagion out there. Unless what I'm hearing is rumor of a $2 trillion bailout. $2 trillion bailout. Why the $1 trillion bailout? That was back then. I don't see the exact news, but I imagine it has to do with bailing out all the depositors. Let's see if the Kobisi letter has anything nice to say today about the markets. Yeah, just in, ECB raises rates 50 basis points despite the banking system worries. This morning, the ECB said some EU banks could be vulnerable to further deterioration. Rates are rising at the fastest pace in recent history. Meanwhile, CS is borrowing $54 billion to avoid a collapse. So while everybody's focused on the banks, the U.S. debt crisis is worsening. The debt ceiling is not raised. The U.S. could default by July. If the ceiling is raised, U.S. debt could hit $50 trillion in 10 years. Annual interest rates on the debt will equal 25% of U.S. government revenue. And Goldman Sachs estimates the breach of the debt ceiling will immediately halt 10% of U.S. economic activity. This would cost 3 million jobs and result in a rise in interest rates that adds on $130,000 on the average mortgage. Wow. So, Bitcoin fighting the good fight. And I want to go over some of those macro ideas, macro reversal ideas, which, I've been telling people, if you want to get the bullish and bearish divergence cheat sheet, all you got to do is email us at info@bitcoinadvisors.com and you will get the bullish and bearish divergence cheat sheet, which that is probably the number one way to trade if you ask me, and I'm giving it away for free. So feel free to email us if you want to get the cheat sheet. So what was I saying? All right, let's go over some of those macro ideas and the different ideas we use to identify when there is a macro low in. And the first one is this, and this is the case for the bulls, guys. A case for the bulls. A case for the bullas. A case for the bullas, and here's what it is. First things first, on the weekly time frame, we want to see a higher high and a higher low. And, to me, this would be good enough. If the week closes, and to be fair, things, this is a higher high than this high. Higher high than this high. So let's give it the benefit of the doubt here. We got the higher high and the higher low right here. And we're getting another higher low and another higher high if we close anywhere, above these wicks. Now, if this comes down today and another so that's the first step. The second step, we wanted to see extreme lows on BBWP, and we did have that on the weekly time frame way back here, November 2022. And you can see the explosive move that resulted therein. And, since the bottom of the market, Bitcoin has rallied, 70%. So nice bear market rally, but point for the bulls. And then on the weekly time frame, we wanted to see the blue buy signal on the hash ribbons indicator. We did get that right there. Okay, funding rates. Let's check out those funding rates. And this is actually important. And I haven't been checking in on this over the past couple of days. Why? Well, it's hard to check in on all these things here, but here's essentially what you want to see is the 0.1% hit, which when was that hit? In November alongside low BBWP. That was a good indicator. So essentially the cost to go short was extremely high there. I hope I'm getting that right. I always get these confused a little bit, but the funding rates on futures contracts, 0.12, 0.1%. That's an extreme read. And that's either the cost to go long or short. Let's see. Right now, is it costing you more to go long or to go short? It's probably costing you more to go long. So am I signed in here? I got to sign in. Let's see what funding rates are at right now. So right in the middle. I mean, it's basically the cost to borrow on futures contracts right now, not 0.993%. That's basically a nothing burger. So nothing on the extreme side. We have not gone up to 0.01%. And let's just go back for a little bit of history here. So yeah, this is where it's costing you to go long. When it's in positive territory, when it's negative, it's costing you to go short. And that was a big short squeeze down there. That's for sure. Okay. So for a low to be in, and to be fair, look at this last read. Did we get down to 0.1%? Not quite. Close enough, close enough. Back in March this year. Nope, not quite there. But we did have it back in November. So I'll give that point to the bulls there. Lastly, we want to see the golden cross on the daily time frame, which a golden cross is when the green 55 crosses the, let me get down my regular charts here on the daily chart. When the green 55 crosses to the upside. And generally, look, this is a good buy signal. I mean, you got the golden cross, price action sucked into the cross, spit back up to the upside. Could this be the decoupling from the stock market? Well, look, to be fair, stocks are going up and heading up to our target right now at 12,598. And that does line up with Bitcoin bouncing a little bit more here, a little bit more. But will the battle cry end? Oh, news in. JP Morgan talking about bolstering First Republic Bank. Are they going to bail them out? Okay. So that, we got 5 out of 6 right now. 5 out of 6. Now, the next one is an extreme read on the fear and greed index. And again, these are all how to identify when a macro low is in. And here we go, over the last year. So extreme read, we did not get this one. This is the only criteria I'd say did not get fulfilled. We want to see an extreme fearful zone. We want to see capitulation. That is the max point of fear. All the sellers sell. And why do they sell? Because they think everything's going to zero, right? And this is, happened a few times in history. This was July 2021. This was March 2020. Oh, that was $3,000 Bitcoin. This was back in 2018, $4,000 Bitcoin. So an extreme read would be nice to line up. Now, adding Confluence, somebody did point out on our Discord and on our live stream yesterday, adding some Confluence, adding some context. Somebody did add this to the Discord, commented on this. And this is it. Monthly. Oh, this is ultimate target for the dollar, by the way. And something to note here, the month is going to be closing in 2 more weeks. So let's see the biweekly on the dollar. Still overall case is for the dollar to rally up into this green box. Invalidation, closer back below this low here on the biweekly. And yeah, probably going to come down much lower for the dollar. But still, so far, my case is dollar probably going to rally, and that does line up with some more downside. And I'm going to have to make some adjustments here real quick, real soon. Anyways, I'm going to go over those trades in just a second. But here's what I wanted to talk about on Bitcoin on the monthly time frame. I will use that's the 2 week. Here we go. Monthly time frame. So we got hidden bullish divergence. Price is making, and we got it coming back from quite some time. I mean, all the way from over here. So that is a huge thing. Monthly hidden bullish divergence. I mean, that could give you a shot to the mid-range there at 44,000. That was confirmed. Volatility is declining now. Monthly Stokes also crossing to the upside.